Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm the senior trader at the Forex Super Model, and this is the Forex Super Model data cycle review for Monday the 21st of the 6th to Friday the 25th of the 6th, 2021. Basically, it's our version of the economic calendar. We've modelled Tier 1 and Tier 2 data, and we've condensed it into single numerical figures. It's our version of the economic calendar as we said. So anyway, we've written it up. China, CNY, T1 for Tier 1, T2 for Tier 2. We've got all of April, all of May, and the first 4 weeks of June, which was in trading terms was the 31st of the 5th to the 25th of the 6th. And on the dollar we've got the same thing. So we're going to start as we rattle through the complexes. There's 10 complexes, and then we're going to do the analysis. So anyway, here we go then. China, T1, Tier 1, plus 7, minus 3, 0. Tier 2, minus 2, plus 4, minus 6. Dollar, Tier 1, plus 10, minus 5, plus 5. Tier 2, plus 3, plus 39, plus 12. Right, stop it there, don't go away. Next two coming up. Right, back again. Germany as a whole country, EUR as the 27 nation block. Right, Germany, T1, minus 1, plus 1, plus 2. T2, minus 5, plus 4, plus 8. Eurozone, T1, plus 3, minus 1, plus 6. T2, plus 9, plus 1, plus 1. Stop it there, next two coming up. Right, back again. Yen, JPY, GBP, pound. Yen then, T1, plus 2, minus 1, plus 1. T2, plus 16, 0, plus 13. GBP, pound. T1, plus 5, minus 3. T2, plus 21, plus 31, minus 2. Stop it there. Right, back again. CAD, Canadian dollar. AUD, Australian dollar. Right, CAD, T1, plus 4, plus 3, minus 3. T2, plus 8, plus 5, minus 1. AUD, T1, minus 2, minus 3, plus 6. T2, plus 10, plus 1, plus 6. Stop it there, last two coming up. Right, last two. NZD, New Zealand dollar, CHF, Swiss franc, chuff. NZD then, T1, plus, straight away, fail, plus 1, plus 3, plus 4. T2, minus 5, minus 2, plus 2. Swiss franc, T1, 0, 0 all the way. T2, plus 8, plus 6, plus 2. Right, stop it there and do the analysis. Don't go away. Right, welcome back. Just to remind you then, what were the weekly flows, the modelled flows. We had a negative opposed driver in the yen at minus 347. Front and back door flows mainly going into the euro at plus 246, into the pound at plus 190, and the dollar was the negative rock at minus 89. So basically we had yen weakness driving. The opposing positive flows mainly went into the euro, the pound, and the dollar received secondary backdoor flows as the negative driver. So we had weak yen, strong euro, strong pound, soft dollar over the week. It may not have seemed like that, but that's what we had. Right, so let's have a look at these then. So China, what's happening with its data cycle? Well, China's not really fired. China's got a negative data, soft data cycle. The dollar data cycle is still strong, but it's coming off. Something to bear in mind. German data cycle's on the up. Euro data cycle's on the up. Yen data cycle is on the up. Pound data cycle is soft. CAD is soft. AUD is on the up. NZD is on the up. And the Swiss is neutral to on the up. So right, that's interesting. So basically you've got a weak China, you've got a weak pound data cycle and the CAD. despite oil screaming, and the rest are on the up. Right, so what do we think's been going on? Right, so you've got the majors, the dollar, the euro, the yen, and the pound. Right, the yen, you've had an equity pump, so you've got a yen transmission, and we've got yen weakness. So that sort of makes sense. You can't always rationalise it in that way, but it sort of makes sense. So we've got yen weakness off the back of an equity pump, the negative equity transmission. We've got a relatively strong dollar, and that's off this Fed, still a hangover from this Fed tightening issue. The euro has been relatively soft off the back of the strong dollar. And the pound's been soft because of numerous things. Sentiment has slightly swung against the pound. You've got this. We had this spiking COVID situation with the variant. Also, the EU were sticking it to us about the Northern Ireland border protocols. So that was, and generally the data cycle of the pound has been sort of tailing off a little bit. So that's where that is. In the commodity currencies, so you've got the CAD, the AUD, and the NZD. The CAD's not sort of semi thinking about benefiting from the oil pump. Gold, just to sidetrack a minute, gold is really struggling at the moment off the back of the strong dollar and numerous other things, but gold's very soft at the moment. And so you've got this, and the NZD has been the go-to yet again for risk-on commodity style trades, much to the detriment of the AUD. We're long AUD against the dollar and the New Zealand. And the New Zealand's been sort of going. So our trades have deteriorated. We've basically had both barrels on both sides of the equation. So our trades have deteriorated from about 4,700 points up to about 1,300 at the moment, and we had a peak of 6,500. Anyway, that's besides the point. We're sticking with the positions because we're obviously not trading short-term noise. We think we're positioned correctly. Obviously in the short term we're not positioned correctly, but looking further out we think that's going to be the case. Right, this Friday coming up is the NFP, so you've got this NFP week. We've got a lot of data coming through. So what are we going to see? Well, we're likely to see sort of running into the NFP non-farm payrolls. We're likely to see a continuation of this sort of like trade scenario, and then you're going to see the foot off the pedal sort of maybe late Thursday, early Friday. So it's going to probably be business as usual in this sector. We're going to have a soft euro, soft yen, soft pound, and a pump dollar. And the New Zealand dollar is probably just going to keep hammering away on the up, and the CAD and the AUD are going to dirge, and the AUD particularly has got a very good data cycle, but nobody's interested at the moment apart from us. So anyway, there you go, that's what we're doing. Hope that was useful. Try and have a look at the flow cycle video for the same period, 21st to 25th. If not, see you Monday for the normal market review. Thank you for watching. See you again.